We're a little bit in the red here. We failed at yesterday's high of 27.33. Our current high 27.33 and a quarter. Our pre-market low is down to 27.20 and a quarter. Not a whole lot down there. Keeping an eye still on the trio of lows at the 2,700 level. Bitcoin, I talked about a potential support area. Well, that didn't hold. We are down under 7,800. Views versus the futures here, down 277.50 at 73.70. Crude coming off the $72 level hard, down 89 cents at 78 or 70.95. And gold and silver are slightly in the green here. Gold up by 620 at 1295.80. Silver in the red or in the green by 14 cents at 1655. Dennis, good thing you covered your lows short yesterday. Oh my Lord. Okay. All right. Are we getting, I'm hearing you loud and clear here, Dennis. Spencer, are you hearing them? Okay. Going to a quick break here. We'll be right back. Hold on one second.
All right, folks. Good morning, everyone. False start on the show today, but we are back with you now. Spencer Israel, Joel Conan, Dennis Dick. If you still don't hear us, try refreshing your page. I put in the chat to refresh, but we should be up and rolling now. Joel, why don't you just recap those levels on the S&Ps real quick?
Yeah, we failed at yesterday's high at 27.33, went one tick above it. 33 and a quarter is your pre-market high, trading down $4 at 26.75. Pre-market low 20 and a quarter. Crude in the red by 96 cents at 70.88. Gold positive by 6.60 at 12.96.20. Silver positive as well by 15 cents at 16.55. And Bitcoin futures trading very close to that $7,000 level. We are trading down $307.50 here at 73.40.
Dennis, are you live?
Yeah, I think you're on mute there, Spencer. So I can hear you. I can hear you guys now. So I am alive here.
Okay.
Take two. Sorry for the late start there, guys. We had a few technical difficulties. It's been a while though. It's been a while since we had the gremlins in the house. So I guess you got to give us a break here.
Anyways, my bad, but I'll get it going tomorrow for sure.
All right, Joel will get it going better tomorrow here. Anyways, let's move on to the markets. 8:09 here. We got a guest coming up in 6 minutes here. So let's talk what is moving here this morning. S&Ps are starting to roll over. When it came in at 7 o'clock, we were flat. You saw a lot of tech stocks trading significantly higher. A lot of stocks over in China trading significantly higher here this morning as well. They're starting to leak the gains. If you want to talk about, catalysts here, well, obviously there's always Trump catalysts out there, but you look at Alibaba is trading up $1.61 this morning, trading up again near that 200 level. We've been talking about the 200 level in Baba. It's like the Great Wall of China there, no pun intended, because obviously Chinese stock, but 200 is the level. It got up not quite there this morning, but I'm telling you, man, that 200 is huge on Baba.
All right, over the last 8-9 sessions, your highs have really been from 198 to 200. It's just nice. That was the area that it fell at to in mid-March here. So some resistance here at 200. On the downside, real good support at 193.5. So I'm not worried about major downside, just consolidating after a big move up. We'll see if it breaks through 193.5.
You also had Apple trading up. It's starting to leak. Apple, multiple headlines. First, there was a bullish report from Morgan Stanley there last night. Came out talking about different catalysts there. They raised their price target up, I believe, to 214, but no rating change there, just a price target raise. Apple was strong this morning. It's starting to leak too. Like I said, a lot of these tech stocks that were very strong are starting to leak. Applied Materials was way up as well earlier this morning. I believe it's added to the focus list at Citi. It's leaking those gains too. So theme of the day so far is we were looking strong, but leak. So I'll call leaky market here this morning as we continue to drift down. We've lost about 5 handles in the last hour. There is some stocks trading higher. There is some stocks trading lower. Obviously, a lot of these earnings stocks here. You had Best Buy, which got a good pop on its report initially, has turned around and went heavily to the red here now. BBY, Spencer, give us those numbers. Joe will break down the pre-market trading for you.
Best Buy Q1 EPS 82 cents versus a 74-cent estimate. Sales 9.1 versus 8.73 billion dollars. So beats on the top and the bottom line for Best Buy. They reaffirmed their fiscal year EPS guidance and their sales guidance. Q2 EPS guidance coming in a little bit light, and domestic comps up 7%.
Joel, thoughts here? Best Buy. First of all, where did we get to pre-market?
79.01, and then your 2-day high was 78.98. It hit that, turned around on a dime. We just made a new pre-market low. It's 73.75, and that's probably going to be our area of support here. 73.94, that was your low on May 3rd. After that, things really drop off into the lower or upper 72s at 72.84. But first things first, let's see if it can take out that pre-market low. Coming back on the upside, 74.65. So we are still trading at yesterday's low. So if you retake that, maybe get a shot at the close at 75.95.
I mean, this has just been the theme. It seems like it's a really finicky earnings season, especially for the retailers. It's like they get a good lift, and then all of a sudden they find something they don't like, or it just turns and reverses and starts getting some momentum going the other direction. They take it back through, where the settlement is, and they take it the other way. We saw it yesterday, obviously big time with Lowe's. Lowe's was a disappointing report, turned around and started buying it. I mean, maybe Ackman was the catalyst there. Because obviously they found out later that he had been accumulating a position up to the tune of $1 billion in Lowe's. So we know that's what the catalyst was at the end of the day. But I mean, these stocks, they just seem to AutoZone, Best Buy, a lot of these seem to have a big move in one direction, and then if they start to leak or they start to go the other way, man, that ball really keeps rolling, and they seem to give it back and then actually go the complete other direction. So it's been a really finicky earnings season.
Yeah. I mean, it seems like unless you come right in with raised guidance that something along those lines. On the other hand, if you give good guidance, it's off to the races. And still, man, I'm still shaking my head at that Lowe's from yesterday.
It's an unbelievable move.
Yeah, 94.69, trading up a penny. And if you were waiting for a gap fill, 95.48, that was your February 27th low. The next day you gapped down. You lost 6 points. I believe that was off an earnings report. So let's see another 80 cents to a gap fill.
Talk GE. We got Jem in the chat talking about that. And wow, did that fall out of bed yesterday with the comments from the CEO. Obviously saying he saw some weakness still. And he said the dividend, he can't promise that they can keep the dividend there. Market just annihilated the stock on those comments. And it goes to show you once again, say it once again, that technicals completely take a backseat to fundamental information. I don't care how the chart looks. I don't care how good it looks. We had Carter Worth 2 days ago saying the chart looked great, is going to 1750. I mean, if you're fading his, call there, you're up big time money here. Obviously, fundamental news trumps technicals every single time. Charts are meaningless when you have fundamental news.
And boy, it hit that hard. I think Spinner pointed out in the chat yesterday. Nearly the whole months of gains in GE wiped out in a matter of, 15 minutes, a half hour. Now you're trading in the red at 7 cents here at 14.11. Let's see. I mean, Dennis, maybe 50% retracement here from 12.79 to let's call it a 3-point move. 1.5 of that, 13.79, 14.25. We're right at that 50% area. Needs to hold in here, or else it could be testing under 14. Last time we were under 14, you had a 13.77 low. That was on May 4th.
This market is tough, though, to call because, like we said, we've seen some reversals. And then you have stocks like Tiffany's and Ralph Lauren yesterday that just continued to go up. And I wish I would have got you on Tiffany's bet there, Joel. I was kind of thinking it would continue. And you were fully on the fade trade. And we didn't make a bet, obviously. But I tell you, man, I probably could have got odds on you on that, too. That Tiffany's just continued to blast off. Ralph Lauren continued to blast off. Lowe's continued to blast off. Ball gets going in one direction, it is so hard to fade. And that is just, Tiffany's. That's like one of the biggest moves that's probably stock has ever seen. I mean, when's the last time it was up 20% or 25% or whatever it was yesterday in a day? I mean, look back to the monthlies. I can't see a candle that big. I mean, it looks like it got taken over.
All right, it's 8:16. We're running a minute behind, but it's okay. But I'm going to take a quick break now, and we want to grab our first guest of the day, Vinny Calimazzo. He's a trader, a local trader from here in Detroit, and he was in our office about a month ago. Gave a little presentation at a Stock Twits meetup that we hosted about how he goes about his morning routine and how he trades the market, throughout the day, but specifically in the morning. So we'll be right back with Vinny Calimazzo. Welcome back, everyone. Pre-market prep. Spencer Israel, Joel Elconin, Dennis Dick on now with Vinny Calimazzo. Vinny, you already have some fans in the chat, so I don't know what you were doing this morning or last night, but you are an independent trader. You were in our office about a month ago, as I just mentioned before the break, talking about your trading strategy. So I guess first off, let's start with how did you get started in the markets? Why did you become a trader?
Great. Yeah, thanks for having me. The reason I got started was because I wanted to create some sort of security and freedom for myself so that I wouldn't be obligated to always be on my desk, and I could still have a way of generating some cash flow and revenue for myself with what I know in finance. And so it was a good fit for me.
Can you describe at a very high level to start with, and then we'll break it down further, but at a high level, what is your overall trading strategy?
My overall trading strategy is to follow what's called auction theory. It's something that came out of the Chicago Mercantile Exchange in the mid-'80s. And it's an approach where you observe the market as if it's an auction, and you really limit the information that you're taking in and digesting and then taking action from. And I basically trade NASDAQ futures using auction theory. And I'm looking to capture intraday moves. So I'm not holding anything overnight with this type of strategy. I'm just looking to capture anywhere from 6 to 20 to sometimes 40 points on the NASDAQ. We have enough volatility right now where you're getting these 40-point trades coming through. So it's been good. I think that conditions won't necessarily be conducive for swinging that much range for very much longer. But that's what I'm looking to do. I'm looking to capture those intraday moves.
You said you exclusively trade NASDAQ futures?
Yes. I will take position trades on the NASDAQ using leveraged ETFs like SQQQ or TQQQ. But yes, all of my active trading is specifically dedicated to the NASDAQ 100.
Can you break down a recent trade for us?
Sure. So I came into the week with a bearish bias. I do a research report called the Sunday Strategy Session. And what that research report is attempting to do is form a directional bias going into the week. And a lot of times it's neutral, but it came into this week bearish. And you might be thinking to yourself, well, that probably didn't work out too well for you, pal. We gapped up into the Sunday Globex, we gapped up something in like 40 points. So right off the rip, it was like, all right, the Bears are playing from behind. However, that's kind of where the rubber hits the road, because unless you came into the weekend, unless you carried futures into the weekend, you had no way of taking advantage of that gap up that occurred over the weekend. And if you saw the way the behavior was from that point on, we basically marked time all Sunday night. And then Monday morning, we came in, we were still gap up about 45 points. And there was a bit of a drive higher to start the week. And then we started working lower. So the two best rotations on Monday, intraday, to get a hold of were actually to the short side. And that was the first trade of the week. Was I worked a short right off the open Monday, looking to fill that entire gap. And we didn't quite get it. And normally I would just take my gain if we got that first push lower. However, because I had that bias from my Sunday research, I held it through the whole session, thinking that we'd eventually close that entire gap. And that didn't work out. I ended up having to close that at the end of the day for a much smaller gain. And then Tuesday, I came into the same thing. We had another gap up to start the day Tuesday. So my first order of business was to short that open. And that worked out much better. And then we came into Wednesday, and now we're gapped down way out of balance. And if you saw the structure of it Wednesday, I was tweeting about it. If you go onto my Twitter, you can kind of follow my thought process.
What's your handle?
Index model.
What's your handle?
Yeah, index model. So I've been talking through this auction all week because I've really had my finger on the pulse. And what we came into yesterday was a gap down that looked like somebody got liquidated. It's called what I call long liquidation. It's another auction theory thing that is discussed in this theory. Anyways, the shape of the auction had the look that somebody got liquidated out of their long positions, but there was no follow through on the selling. So yesterday morning, I'm saying, man, back off the shorts. And so yesterday I took no trades. However, we did see that strong push higher all day yesterday. It ended up being what looks like a double distribution trend day up. So that's kind of, those were my most recent trades this week. I took two whacks at this thing on the short side and then backed off yesterday. And here we are. Today's Thursday, right?
Last I checked. So are you only
still Thursday?
Yeah. Are you only trading like in around the open, or do you have your eyes on your screens throughout the day, or kind of like how does your day break down?
That's a great question. Yeah. So basically, I'm trading the open almost every single day. That is my bread and butter time of the day. I'll set up a morning report. I usually publish it around 9 a.m. and I say right in there, this is what happened overnight. These are the economic events coming up today. This is what the NASDAQ did yesterday. This is what I'm going to do today. I have a primary plan for every trading day. And it typically starts out something along the lines of buyers work into the overnight inventory. Like right now, we're basically flat. All right, we're down 7 on the NASDAQ. My primary plan when I go to write this thing is, all right, buyers work into the overnight inventory and close the gap up to 69.57. So that'd probably be the first trade of today. And so that's definitely when I'm trading the most frequently. And typically I'm done doing that by about 11 a.m. if things work out. And then occasionally, like right now, because I had this bias, which I've backed off of after the FOMC minutes. But when I have this kind of a bias, sometimes I will come back around 1:30 and look to trade the afternoon, but that's very seldom.
Great question from our chat that I want to ask anyways. How do you find your bias? How do you get that bias? Where does it come from?
Okay, so there's the big 3 questions, and it's what has the market done? What is it trying to do? And what is it likely to do from here? And that's where the rubber hits the road. That's where you're on the right edge of the chart and making those active decisions live. So what I do over the weekend is prepare as much as possible by taking only the information that I find relevant. And so for me, as a trader of NASDAQ futures, there aren't very many inputs that I necessarily need to see. But the ones I do need to see are the 4 major indices. So you've got the S&P, the NASDAQ, the Russell, and the Dow. And I go and I rank 5 different metrics on each of those indices on a scale from 1 to 5. So you got like your 2 to 3 day trend. You got your 2 to 3 week trend for your intermediate term, stuff like that. It all gets ranked out. And then you get what I call a bias score, anywhere from 1 to 5. And then that gets married to some of the analytics data that's in the software platform that I use. And it all kind of comes together and it forms what basically looks like an oscillator. Like, I don't know if you guys ever use like an RSI or anything like that. It has a similar look. So you'll see this line going through time, oscillating up and down. And then after I built out about 150 weeks worth of this data, I ran a study on it and said, all right, when is this an abnormal reading? When has this thing gotten so high that we should pay attention? And when has it gotten so low that we should pay attention? And then I started building around that. So that's kind of how the bias model, came to be. It was kind of like a hand-built algo that supplemented what I was doing at my discretion, if that makes sense.
2 follow-ups on that. One, can you give us some of the metrics that you rank?
Yeah, so I started out, I do the 2 to 3 day trend. I like to look at the 2 to 3 week trend. I do one that's called nearby magnets. Now that goes back to auction theory. That goes back to, if you look at what we've done for the last 4 weeks in the NASDAQ, we've basically chopped. We chopped for 4 weeks, then we went a little bit higher and we chopped again. That chop that occurred since about, May 15th formed this huge auction. I've been calling it the Mama Luke on my Twitter handle because it just keeps growing and growing and growing. The market's totally accepted value for a lot of days, right around, what is this? 69, 12.75. So when a market finds something like that, it tends to want to revisit it. So I rank nearby magnets. Are they above or below? And then I rank volume. Is the volume, is the volume coming in on the buying side? Is it coming in on the sell side? You know, that's kind of giving you a sense of how good of a job the market's doing in its attempt to move a direction. So you rank volume, and then I forget what the fifth is off the top of my head. Let's see if I can pull it up. Oh, excess high, excess low. So if you've ever seen when we make a new high and you get like a sharp reversal off of it right away, on a candle chart, it forms what looks like a wick, they call it. So I rank the highs and the lows, the nearby highs and lows. If we have a sharp reaction higher on a down move, that's an excess low. That gets a bullish, like a 4 or a 5. I know that's a bit much to throw at you guys, but that's kind of, those are my ranking mechanisms.
And what software do you use that you mentioned?
So the software that I marry it to is called Exodus Market Intelligence. And that's an analytics platform that takes over 4,000 stocks, T-bills, the whole 9 yards, and does basically what I do, but automatically. So then I take my ranking mechanism and I marry it to that net score of what that thing's generating. And what that does is it kind of gives you a sense of the moving parts under the surface kind of get baked into my model without me having to do a 1 to 5 ranking on 4,000 different stocks.
Where do you publish your research?
So every morning I do a public report on my blog. So that's completely free for anyone to see.
Where's that?
And that's on, currently it's on ibankcoin.com. And I'm actually making a transition to my own website, hopefully this month. It's just so many things going on, but yeah. So if you go to ibankcoin.com, I publish my research under the pen name Raul3. So that's where you'll see my morning reports. The Sunday strategy session is inside the Exodus platform. So that's for our members in there. As of right now, it's behind that paywall, unfortunately.
Last one, and then we'll let you go. But why do you trade the NASDAQ as opposed to the S&Ps?
So we're entering the summer now, and the ranges, to me, it looks like volatility is starting to come down a bit. The markets are starting to normalize after what's been a 3-month-long time-based correction. And as you see those daily ranges decreasing, when you start trying to trade the S&P on that, there isn't enough movement for me to get a piece of that. I'm not somebody who wants to just go out and whack, the mouse all day and grab little 3-tick moves. I'm looking for 6 points on the NASDAQ. And so it has a bit more movement. And also I feel like you have to really be honest with yourself and who you're up against in any instrument. And with the NASDAQ, I feel like there are some underfollowed indicators that are out there. Like the perfect example is the NASDAQ net 100 tick. So there's a tick on the NASDAQ, just like there's a tick on the NYSE. And it's just an underfollowed thing that you can build a study on, and it's gonna generate some very actionable information that gives me an edge in this market. So it's the movement that's available, and it's the underfollowed indicators that I can kind of bake algorithms into.
All right, one more. I lied. Why are you bullish Tesla?
So this is my belief on stock market investing. I gave up trading individual stocks. It's just not something I do anymore. What I do instead is just I completely shifted how I believe in how you can make money in the stock market on stocks. And that's what I call faith-based investing. And it comes down to, are you ride or die for something? And the reason I'm ride or die for Tesla is because I love the disruption that's occurring there. I know that's a cliche thing, disruptive. I love the leadership, and I love the vision and the goal of the company to the point of like cult-like belief. Like I kind of jokingly assume this like cult member tone when I talk about Tesla. I'm just trying to emphasize that I'm completely on faith because I believe the long-term mission. So for me, it's just a quarterly purchase. Yeah, I don't even think about it. Buy a little Tesla every quarter, never sell it because I have drank the Kool-Aid.
Well, that's the honest answer. So I appreciate that. Vinny Calimazzo, you can find him on Twitter at Index Model, or as he mentioned on ibankcoin.com. Vinny, thanks so much, man. Have a good one.
Thank you. Thank you for having me. Have a good one, guys.
All right, 8:33. Couple minutes till we grab our next guest. Anything I missed while Vinny was talking, guys?
I mean, the market continues to roll over. Oil is a catalyst here today. Oil is getting hit on the chin pretty hard here this morning. We're down 1.1% in the U.S. So every oil stock, if I'm looking at my filters here from this morning, it is littered with oil stocks trading in the red. We got BP trading down about 70 cents from the close. ExxonMobil trading down almost 1%. Chevron's trading down 0.7%. ConocoPhillips, not to be, it's down another 1% too. Oil stocks really getting hit here hard this morning. So that's one thing. Early on, techs were looking strong. They are not looking strong anymore. The Qs are starting to roll over here too. Apple's almost trading in the red despite a pretty bullish report from Morgan Stanley being published on it last night. So you can just see here, we've got definitely some profit taking this morning across the board, and that is being led by oil.
And we did have some initial jobless claims. Market was heading towards mid-range on that. Did get a little bit of a bump though, but the crude started to fall yesterday. When some of these inventories were released, and at these higher prices, they're just going to be cranking up. The output here. So we'll see what happens here now. Back under $71 at 70.93. You want to
Best Buy continues to leak too now, down 3. So you've seen a 6-point reversal there. Best Buy almost 10%. Crazy moves.
All right, you want me to go grab Jeremy? I'll go do that. All right, we'll take a quick break, and I'm going to grab Jeremy Newsom from reallifetrading.com. And welcome back, everyone. Pre-market prep. Spencer Israel, Joel Elkanah, and Dennis Dick. As you can see, we are joined by someone else in our Skype chat this morning. Jeremy Newsom. He is the CEO of Real Life Trading. He's making some gyrations of some kind on his screen. Jeremy, how's it going this morning?
Dude, sensational, my brother. How are you?
We're doing good. We want to know what you did to Dennis, man. I mean, I think that this is the first day that he sounds normal. What did you do to him? What did you do to him in Nashville?
Man, Dennis, it was so good hanging out with you, man. We had some phenomenal barbecue. Went to 12 South. I showed him a good time, but he was down here for a bachelor party. So I mean, that was all.
It's taken me a lot of days to recover from this Nashville trip there, Jeremy. And then my flight got delayed 7 hours, and I was like, that's not what I needed. But it's all good. It's all good. It's great to meet you too, Jeremy. And, we had a great conversation just talking the markets. And obviously we want to bring some of this conversation here today as well. Talk about first, and for people who don't know you, give a little bit of background on yourself and talk about, real life trading.
Yeah, man. So I'll do the absolute best I can. I went to college to get a finance degree to learn how to trade the stock market. And they do not offer a stock market degree in college. I thought that's what they were going to be teaching me. So once I left college, I was thirsty, man. I was really hungry to learn how the stock market worked. And every company or program or site that I went to just charged astronomical amounts of money for it. And I knew there was other people out there like me who wanted to at least learn a little bit of the basics about trading. So I created a website and just taught everything I know for free. To try to just break down a lot of barriers so that some people who want to learn and might not have the money, they have zero excuse that they can at least learn a bit of how this thing works. So that's the quickest background I can give, I guess.
Let's talk about your trading style. I know you're a big options guy. Talk about your trading style just here for a quick minute.
Yeah, absolutely. So I focus primarily on day trading. That is my number one go-to strategy. I feel that it is the safest strategy for the short or interim term because you don't have to worry about overnight news, gaps, anything like that, scaring you. So I do a lot of day trading. As we talked about, and what I loved, one of the questions you asked me was, what is your time frame? Which is a phenomenal question. You have to know that as a trader. Like, what is your time frame? So for me, I would say 10% of the stuff I do is very long-term, 20 years or longer. And, you can't put all your money into that because it's not going to pay the bills if you're an active trader. So I would say the other 20% of the stuff I do is somewhere between 3 days and 3 weeks. And then the other 70% is just day trading. So day trading either stocks or options.
So how do you pick, when you're coming in here and you're seeing options set up, what are you using as, your indicator there that's going to tell you to buy or sell?
Man, I'm real boring when it comes to my.
I like boring. That's my style. That's me. I'm a boring guy, kind of.
Yes, it is very vanilla custard. So when I trade options, I trade like 10 stocks because when you're trading options, you really can't be, you can easily be flummoxed. So you're going to be using Apple, SPY, even Google and Amazon now are kind of ridiculous. Tesla sometimes, Netflix, blah, blah, Facebook. So I'll use the really, really big names that have very small spreads and great liquidity. And man, I draw support and resistance lines on the 5-minute and the 10-minute hourly charts. And if it's trading down to the support, I buy calls. If it's trading out of resistance, I buy a put. I always go in with a very, very specific amount of risk. So that's really the key. That's the big thing is I never lose big ever. I'm very not a flashy trader. So I usually have small wins, small losses. Every now and then I'll have a big win, but it's just a lot of small wins that are bigger than my small losses. And when I'm trading options, that's exactly what I'm looking for. Is just those big names to be at a good support level. Like yesterday when the SPY gapped down, it was at a support, so I bought some calls, and that was really it.
And then the reversal, and then it's payday for you.
Payday, baby! It did. It worked really well yesterday. Made $500 in about 17 minutes, so it felt nice. And then when I trade shares, I just look for a really nice gap. So Lowe's, for example, yesterday, man, you had all of those shorts. I mean, I know, Joel, you were thinking of me. I know you were. Man, all those shorts that piled in on Tuesday got absolutely wrecked at open. And that was a time to go long, man. I mean, that was just beautiful bullish trade.
Funny, Jeremy. I almost got wrecked at the open, and I'm all about discipline and getting out. And it's the spiny senses that probably saved me a lot of times when trading prop for 20 years. So I've made a lot of trades, and I actually looked at that 90 when it was coming up, and I was like, I wanted short it at the 90 level because I was kind of ticked off that I missed it from the day before. It got up to the 90. I put the short on, and it had so much momentum going. I was like, you know what? I think I'm on the wrong side of this. I was actually live on the show when I was talking about being short, and I shorted the 90, and I quickly covered about 2 minutes later because it just blew through and it came back down to 90. I was like, you know what? This thing just got too much gas. So that's one of those like 13-cent losses that feels like a win, because if I wouldn't have covered that, I would have been buried in that Lowe's trade. So there you go. I almost got run over. One of those trades you're talking about.
Exactly. That's what happened to a lot of other people, man. A lot of people weren't fast enough, and then they're down. And when you're down big, you get scared. You're like, I don't want to lock in that big of a loss. And a little bit worse and a little bit worse. And that's what creates that short squeeze. Very similar to what Tiffany's did, I think, Monday.
Wow, Tiffany's. Talk about that one. Were you playing that at all? That move's incredible.
So I did look at Tiffany's. I did not play Tiffany's that particular day, unfortunately. I would love to tell you I did, but I looked at it for about 17 seconds, and I was like, is this going to go down? And then I thought about shorting it. And then right when I thought about shorting it, it had another bullish candle. I was like, nope, this is just going to keep going, guys. I mean, no, it wasn't any earnings, I don't think. It was just like it
was earnings, but it's just a continuation. Like, it came out. It looks like we were joking on the chart this morning. It looks like it got taken over. I mean, there was up $23 on it.
That's what I'm saying.
Incredible move.
It was like a continuation. It wasn't like their earnings announcement, right? It was just like a continuation of their.
Yeah, it was the initial earnings announcement, and then they didn't re-announce earnings. It just continued to go up. So obviously gapped up the 10 points on the earnings, and then gained another 10 as they just kept coming in. Ralph Lauren pretty much did the same thing. If you look at the chart of RL, had the gap and go as well. I mean, it's like this market. I don't know if you've noticed it, Jeremy, but I've been saying it for a while. It seems like when the ball gets going in one direction, the momentum gets going in one direction, it can continue. If you're in favor, you're hot, you're not, you're not.
Man, I did not see Ralph Lauren yesterday. This is the first time I'm looking at that chart. That is brutal. Oh my God.
If you're short, it's brutal. If you're long, you're like, let's go to Nashville.
That's what I'm saying. That's why I highly recommend everyone make sure to tune into this show every day before the market opens, because these guys, seriously, they're calling really good picks. I mean, if you were talking about Ralph Lauren yesterday, bravo, gentlemen.
Jeremy, we were probably shorting it.
Yeah. Jeremy, did you say you set 20-minute support and resistance levels? Someone's asking in the chat in that, or are you going more off the dailies?
So I look at the daily to get like a general perspective, but the daily chart doesn't really change that much, right? From 2 or 3 weeks. So what I do is I get the daily picture. But remember, if I'm trading an option stock, I trade the SPY every single day. So I'm not changing my daily lines, but I'll go into a 5-minute perspective and draw new support resistance every morning and just kind of get an idea of, okay, where is support? So let me just pull up the SPY. I know you can't see it on my chart, but I'm sure you'll be able to pull it up on yours. The 5-minute time frame, I'm going to go into extended hours. And okay, so we have a resistance at 273.39. So that's the high of yesterday. And we have a support at 272.39, which is beautiful because that's $1. So what I'm going to do, now again, doesn't mean this is going to happen, but if we go down to 272.39, I'm going to buy calls. If it trades up to 273.39, I'm going to sell those calls, and I'm going to go buy puts. And that's that. That's my plan for the day.
Jump over to, we're going back over to the chat. They want some stock picks from you here. So they're asking about day trades. Fuzzy's asked it twice now. You got any trade setups for today? What are you looking at, as you approach, the open here in 40 minutes?
Yes. So Netflix is going to hit 400 in the next few weeks, probably.
Well, that's a big call right there. 400. Yeah. Jeremy Newsom from Nashville giving his price to 400. Is that street high, Spencer? Is that a street high on Netflix? Jeremy Newsom
that might be a
street
high. Holy moly, 400. Let me see here.
He's going to the pro to check out if anybody's higher than 400. $400. So how are you playing this? How are you going to play the ride to 400?
Netflix is bigger than Comcast now, Dennis.
We mentioned that.
Incredible.
Dude,
incredible.
Me and you were talking about it. I mean, Dish Network is gone. DirecTV.
Yeah, you know what?
Dude,
I agree there.
The CEOs are listening in. Call Joel and Dennis. Make them your new CEO. I'm telling you.
I think
I don't know much about running a cable company. I don't think I can pull you out of the gutter, Dish.
But Netflix is a long play, like as a swing. So buy any dip. When the dips come in, buy them. I'm looking at Sanderson Farms this morning, SAFM.
Earnings.
It's having really. So here's a question for you guys, and Joel, you'll probably know the answer to this. Why is like food processing companies just getting absolutely shredded the last year?
Oh man, we've been talking about this.
Who eats? You don't need Campbell's soup. You don't need to eat anymore.
I mean, you have Campbell's, Kraft Heinz, Dean Foods, Tyson, ConAgra. All the food companies are just getting shredded.
Food is just not in favor right now. Nobody's hungry. Nobody's hungry.
No one's eating.
I think so. That's maybe they're all going out now. We're in a bull market. They all go out and they, eat at the restaurants and stuff. They don't need to eat there. When a bear market, then you need your Campbell's soup and your Kraft Heinz. When all these traders blow out their accounts back after 2001, Campbell's Crafts does well because you're eating out of canned soup. Now you're rolling in the dough because we got Netflix going up maybe to $400. A lot of people in there, so go fancy meals now. I don't know. I honestly don't have any answer for you on the Campbell soup. It's an incredible move down though on some of these foods.
Talk about your setup here in the Sanderson's Farms, trading down $6 here. Did you just want to walk? I know you like to wait for. Is it the first 5-minute candle or what? Yep. Just walk us through your setup.
Yep, you got it, Joel. So you have a pretty solid buy. There's not a massive amount of volume. But the last 7:35 Central, 8:35 Eastern candle, pre-market, pretty decent bullish candle. So I'm looking for Sanderson Farms. If it opens below 103, I'm going to wait 5, 10, 20 minutes and just wait for it to break support. I mean, it's in a bearish trend. The trend is not bullish by any means. And if I get some weakness or some rollover, any type of evening star reversal pattern, just some type of support level to break down on Sanderson Farms. And then my target will be the pre-market low, which is about that 99 area. So if let's say it opens right now, 101.66, I'm gonna wait 5-6 minutes, just see what the candles look like. I'm looking for a small indecision doji, some type of high wave candle. I'm gonna short right below there, stop above the pre-market high, trade it down to the pre-market low.
I mean, this is, just a momentum trade here, and I like the way you're looking at this. The trend is not your friend, so you get these bounces. You're looking to sell these bounces. Is that typical of a lot of your strategies? Like looking overall, is this stock strong or weak? And am I going to go with the overall trend here? Maybe fade a counter trend move in an overall trend that's down.
Yeah, I'm usually if the trend is my friend, we go to the movies together, we share a Snickers bar. We split the popcorn, but I'm usually just going with a trend because it's easier. So Tiffany's, I would have been long. Ralph Lauren, I would have been long if I would have played them. So if it's a good gap, Sanderson Farms, it doesn't mean it's going to work, but the trend right now is bearish, and it's a bearish gap. So I'm going to be looking for that bearish trade. A lot of people say don't pick a bias. I kind of disagree with that because at some point, if you never have any direction of what you're going to go, how do you know what direction to take? So it's like, at least if you have a direction, you kind of you can focus on that area, and then you'll be able to find a trade that's going to work in that direction. The biggest and most important thing is your direction right? And that's going to come down to sentiment and what the trend is overall doing. So, by the way, I want to give a shout out to Spencer with that beautiful beard. I'm loving it, man.
Okay, and Jeremy, DC1 from the chat, since you're trading, you have a Ralph Lauren shirt on there backwards. He wants to know why you didn't trade it yesterday if you wearing all that Ralph Lauren stuff.
Dude, so this does look like Ralph Lauren. It's real life trading. It's the logo for my company, but it looks like Ralph Lauren. I honestly, man, just truly did not see that gap. I do not know how I missed that one all day long. That is no excuse, I know.
You can't see them all though. And you know, I was just gonna say, you know, this is something that a lot of traders, you know, even myself, you know, struggle with. It's like, oh, look at that. Why didn't I notice that? I mean, there's 6,000 stocks out there. You're not going to notice everything. Even if you got scanners, you're still not going to notice everything. You know, just pick what you're trading and go with it, basically.
Man. No, I will cry about that later tonight. Me and Jim Beam will discuss how we missed out.
Are you using like a screener or a scanner tool, or how do you find your gaps?
That's a great question, my man. I do use a screener. It's really easy, just barchart.com. It's free. They have the gap up, gap down list. It populates at 9 a.m. Eastern every day. Also, like the pre-market stockwatch.com. I mean, you can Google, you know, pre-market gaps, and you're going to get 3 or 4 free scanners. And obviously, I use Thinkorswim. I have interactive brokers. I have a few different monitors set up. So these guys are going to have some scans on them. These guys over here are going to have some scans on them. So I'll have a few different charts populated and just kind of watching some things and keep an eye on it.
All right. Jess wants to know what's your website. Just give that again, where you can find you.
Oh man, reallifetrading.com. That is the website. And yeah, we're doing our absolute best to teach everyone from the age of 7 to 97 how to trade the market, how to day trade, do it entirely for free. It's phenomenal. Learn this stuff, folks. Financial freedom is everywhere. Money is everywhere. Just go get some.
That's Real Life, Life, not Live. Just to clarify, Real Life Trading. Jeremy Newsom, we got to get you on Benzinger Pro, but in the meantime, have a good rest of the day, man. Thanks for coming on.
Yes. Thanks, gentlemen.
Thanks, Jeremy. Get those exercises in, buddy.
You guys rock. Love you. Have a good one.
Man.
Thanks, Jeremy.
Hey, man.
All right. That was a wild one. That was fun.
Oh, Jeremy's awesome.
Yeah,
that's personality. That's what we like right there.
He's a good dude.
Pick us up here.
Yeah. I overslept today. I was feeling pretty down this morning.
Oh, me too.
Yeah. Okay, well, he brought me up now. So, okay, it's 8:55. We have 5 minutes, but let's do it. Let's do something.
Let's do something. What are we going to do?
Well,
let's go look at
there's so much we need to look at today.
Okay, let's go talk GE here because we briefly mentioned it yesterday, and obviously it was comments there. Dividends not safe. I mean, it's continuing down here today. It's got 261,000 shares more to sell here this morning. So some institution is saying, look, I was wrong. Get me the hell out. I mean, that was a big candle. If you believe in the 2-day move, and I'm all a fan of the 2-day move, and basically just to sum that up, that means when you have a trend and you have a counter move in the trend, it often follows through for more than one day. 2-day move would say, geez, going under 14. I think it's going under 14. Sorry, Spencer. I know you still got this one. Unless you snuck out of it. You could have snuck out of there 2 days ago, got your money back. Did you sneak out?
I didn't. No, I wasn't going to.
I didn't sneak
trade
out either.
For
I
wasn't going to sell for like a 5-cent profit. So, no. I didn't.
Hot garbage the GE stock is. Some analysts and commentators going around. I don't know who said it, but it was just a rumor that some analyst was saying single digits for this. And I don't know if single digits, but I think it's going under 14 today. Joe, you want to make a bet? I think GE.
No, man. Come on. It's only 8 cents away. I mean,
that's away. It's 14.10. It's 10 cents away.
Oh,
that's like 0.7%.
It's gonna, you know what? How about, I think it's 1377 and 1385. I think you'll easily see those two levels.
I think so too. So we're on the same side.
Yep. Those are some lows that you had from May 3rd and May 4th. If you don't want to short it in the hole, or you're thinking of maybe going long this dog, at least let it get green on the session. 14.18 was your close, and let it hold that for 10 or 15 minutes. But I don't think we're going to see that scenario. Best Buy continues to leak here. Really nice.
Wow.
Yeah, look at this. Just traded 71.56, 71.18 is your current low. 71.33. That was your low on April 16th. Actually, 3 lows in the 71 area. And then look out, double bottom at right at 70 even. So those are some half and whole numbers here in Best Buy.
Also here, just looking at imbalances, other standout ones. You get Twitter, small sound balance, 36,000. Square has a buy balance of 67,000 shares. It actually is trading in the red. It's still trading in the red. They were a little bearish on it fast money last night, which got hit down when they were talking about it. Again, that fast money is so influential, even when they just comment in passing. But I don't know here. I'm looking at 67,000 to buy. It's been trading the red. That open flatter in the green, it might be an opportunity on the short side, actually. Oil stocks, again, we talked about it off the hop. They're very weak. ExxonMobil, 30,000 to sell. ConocoPhillips, 25,000 to sell. BP, 25,000 to sell. Lowe's, LOW, giving a little bit back this morning, is 39,000 to sell. So maybe somebody looking to book some profits. But again, that stock is just, that was a huge, I think, just as we say, stocks with overhead supply, I think you're going to see underneath demand now in Lowe's, as there's people probably who got buried there on that move yesterday. So there's going to be buyers as that thing tries to pull back. It's pretty much the bulk of what I see in huge from imbalance land.
Anything on ratings?
The big one, Deere. DE catching an upgrade to buy at UBS. They give a price target there, Spencer, on this one?
I didn't see the price target, but let me confirm with our news feed. Price target on Deere, yeah, $185.
Stock is trading up here in the pre-market. It's up about $1.72, so that is your catalyst here. That's pretty much, the ratings were quiet here overnight, so Deere is the only real standout here that I see. That's, again, the upgrade from UBS.
Let's just take a look. I had its earnings, and on that day, it hit 159.41. Ended up red on the session, though. But we are trading higher. Let's first things first. Let's stay above the high from yesterday, well above that 156.69. But let's keep an eye. 2 levels on the upside. Tuesday's high, 159.41, and then that high on earnings day of 161.39. If you're looking for a gap fill, you're going to have to let this fall down under 157. Yesterday's high, 156.69.
We had a lot of stocks to talk about. We didn't get to a lot of them. We had a couple guests here today, too. I'm just going to quickly go over some of the other news here in the next minute. Celgene, $3 billion buyback. That stock's trading up $1 in the pre-market on that news. You obviously had a lot of other earnings reports we didn't get to cover, like L Brands last night, which disappointed. It's trading down $2. Williams-Sonoma blowing it away. It's trading up 5 points this morning, or cool 11% there. You have NetApp and TAP going the other way, trading down 5% on disappointing earnings there. So a lot of earnings stocks, moving stocks in a lot of different directions here today. So it's mixed. Small China stock, Spinner was talking about in the chat a couple days ago, and I actually put this one in my investment portfolio. I think it was Scott that was originally talking about it back on my Twitter account, BILI. He was the same guy that gave me IQ. So props to him here. I actually put this one in my investment portfolio just ahead of the earnings there yesterday. Happy that I did it because the stock is trading up 11% here this morning. That stock is a stock that does streaming video online and a lot of video game streaming. So it's almost like a Chinese play, a little bit on esports, kind of a derivative play of it. But that's, the stock that's trading up here this morning significantly here from China. It's up 11.5%.
I think Joel's going to stay on and do some of the technicals and some of the stocks that we didn't get to today. Dennis, adios, and Joel will be on with us for a few more minutes. And if you have questions for Joel, throw them in the chat, and we'll try to break them down for you. So, Joel, let's roll.
Okay. All right. First looking, let's just quick recap of the S&Ps. Kind of a quiet session since the show began. But what is of significance to me right now is trying to hold on to mid-range. Mid-range on the session comes in at 27, 26, 75. So need to get above that for a chance to rally. On the upside, taking a look, big resistance. You had yesterday's high at 27.33, and then you have the pre-market high at 33.25. We're getting L Brands here, and we had the report on that. Trading in the red here. Spencer, do you want to go over the LB report?
Yeah, I can do that. The Q1 EPS, 17 cents, missed by a penny. Sales 2.63 versus 2.59 billion. So a fine Q1 report. Nothing bad there, but the guidance was not great. They lowered the fiscal year EPS outlook, lowered it by 25 cents on the low end of the range from $2.95 to $2.70. The Q2 EPS guidance came in light as well. 45 cents was the estimate. 30 to 35 cents is what they see as far as Q2 is concerned. So weak guidance.
Yeah, weak guidance. Stock is weak. Pre-market low is 31.51. And boy, there's some big levels for L Brands to hold here in order to get off the mat. Two lows come into play here. 31.35. That was your May 11th low. You have not seen that level yet. And then the recent low of the move, 30.70. So first things first, taking out the pre-market low at 31.51. And then you got those other levels coming back on the upside. If and when this ever gets back up to the 34.50 area, you've had your 1, 2, 3, 4 last 5 highs just surrounding that $34.50 area. Bull for Trading wants to know which way Micron is going today. So hold on, let me pull out my crystal ball from under my desk here and take a look at the, let's see, we're over 60 bucks, just kind of hanging out here, up 8 cents. I will say, boom, boom. I don't know where it's going to close, but I'll just give you the recent high is 60.50. I'll look at that as resistance. But I mean, holding 60 off the hop, I think is important. 59.97 is your close. So I don't think if you can't hold 60 in this red tape so far, I think you got a good shot at testing the double bottom from Tuesdays and Wednesdays trading at 58.15 and 58.30. So that is my look on Micron. DC1 is talking about a stock or asking me about a stock, TTC. And I don't know if I've ever have come across this issue. You have a big range here. Any news on this one, Spencer?
This is Toro. They had earnings this morning. The EPS, the $1.20, missed by a penny. The sales was light as well for Q2. The Q3 EPS guidance was mostly in line, as a hair light, and the fiscal year EPS guidance was light.
Is this the lawnmower maker?
You're throwing me under the bus here. I really don't know. Here, okay. I'll look and I'll find out for you in 3 seconds.
Okay. I just, that's the only time every time, anytime I ever hear Toro.
Yes.
Okay. Well, we're trading at 61.33 up a stick. And boy, you got I'd say it's really out of the woods if it can clear $62. You had a couple highs ahead of that. At 61.70, you had a double top, then another double top at 62. So clears those two areas of resistance. Things open up to the $63 area. Coming back on the downside. Let's see if there's any volume with this. Not really. Coming back on the downside, like no volume. No one's trading this. You really want to hold that close at 60.33, and that was right near yesterday's low of 59.92. But so far, the resistance at 62 looks like the better number to look at, whether you're trying to short or maybe exit along. Stargazer, he wants to look at EWZ. I believe that is the Brazilian ETF, trading down 92 cents here in pre-market trading. Not sure what kind of news we have coming from over there. As Jerry, what did he say? Your trend is your friend, and he's going to go to the movie and share a Snickers bar or something. The trend in this, as of late, has been down, looking at 37.62. That's the big number it needs to hold. That's been the recent low of the move, trading down in the pre-market. So better hold 37.62. Let's see here. Mini Siniste in the chat is asking about JD.com. JD, quiet consolidation here, but trading up 13 cents. Really, if you could click, yesterday's high was 37.18. You had two other highs right in the $37 area. So if you could mop up the seller at 37, things are pretty wide open until you get into the upper 37 handle, 37.76. But just be careful here. Long, we've had a big decline, a long consolidation. Earnings were recent too as well. So I'm not sure if you have a catalyst to take this higher in today's session. GSVC from Takaz. Boom, boom. I think that's a stock that Colb's talked about before. Let's take a look at GSVC. It might be a holding company.
Yep.
What is it here?
This is the one that has a large stake in Spotify, among others.
Okay. Yeah. Not moving that much. You have just in a trading range here over the last 5-6 sessions, down 21 cents. I'm not sure what that's attributed to. Looking at the support here, opening up into yesterday's low, which was 681. Other lows at 675. This just doesn't look like a big mover, but important to hold that 675, 680 level off the open. Close right near the high as well at 701, 706 was your high. So you need to get a couple of sustained closes over $7 for this to get a little bit of a rally. Let's see here. Cajun one wants to look at Whirlpool, and that got whacked. Spencer, bad earnings?
I didn't see anything.
Whirlpool?
I didn't see anything
No?
on Whirlpool. Hold on a second. Let me look again. We have a Dutch auction tender offer. 6.27 million shares at 159.50. We have an update that was about an hour ago, and then a total of 7.19 million shares have been properly tendered at or below 159.50.
All right. Well, your 159.50 is going to be your resistance level. They really whacked this on the initial news. They took it down in pre-market trading to, what is your pre-market low here? Your pre-market low comes in way down at 151.10. So someone did not like the idea of that Dutch auction. The only thing I say is caution on this one, because Herbalife did that Dutch auction, and they whacked it and went all over the place, but it ended up being a pretty favorable thing for the stock. So 159, I'd keep an eye on that level. Stargazer, yeah, I'm still holding this Western Digital. I've just been using that $80 level. It's dipped under it several times, really over the last 6 or 7 months, and I've been waiting for it to get back over that level, and it is again. Double top to contend with it at the 88.53, 88.62 area. If in fact we can clear that, I just see nothing to the round number of 90.14. That was your April 23rd high. But if you're looking for major resistance in this thing, I think I'd have to wait for 92. I see a series of 3 highs at 92. Going back to early April, and our last stock here, I haven't looked at Seagate yet. STX, it's trading, it's flat in the session. Two really a matching range days over the last 2 sessions, 48.45 and 58.45 and 58.29 are your 2 highs. So above that, little room on the upside. Surely don't want to see it break the pair of lows from Tuesday and Wednesday at 57.33 and 57.46. And Dennis said somebody just had a big oops trade. I'm not sure if that was in JD or what he was looking at. But all right, Spencer, you want to wrap things up and preview the final show of the week?
Yeah, tomorrow's show, 2 guests again on Friday. Excuse me. First up at 8:15, we're going to be joined by Greg Furman. He's with E-Trade FX. He's primarily a futures trader. And then at 8:35, a guest who has not been on the show for quite some time now, Frank Holmes. He runs the Jets ETF, has also written several books on gold. So we'll talk to Frank at 8:35. But that's our show for the day, folks. Catch the podcast on iTunes, SoundCloud, Stitcher, and TuneIn. Thanks to our guests today, Vinny and Jeremy. Hope you guys enjoyed the show. Thanks to everyone who was in our chats, and have a good rest of your day. We'll see you folks on Friday.